Part B. Excelsior Limited is a company which is listed on the JSE. It is the sole shareholder of 3 resident companies. Okay, so we've got Excelsior sitting over here, and it is the sole shareholder. So that means it owns 100%, and 100% of Excel High, Excel Varsity, and Excel Property. So all of these companies are connected persons. They also form a group of companies which is defined in section 1 of the Act, and it says it's a situation where a company like Excelsior there basically owns more than 50% in all of those companies. Right, so these are the 3 companies. Excel High, which is a company with private high schools throughout South Africa. It's registered under the South African Schools Act of 1996. Its annual revenue each year exceeds 190 million. Now you should see here that this is VAT exempt because they're registered under the South African Schools Act. Okay, and of course, let me just get you the reference. 12H. Then Excel Varsity, which is a private university group which is registered under the Higher Education Act. Its annual revenue each year exceeds 250. This is also VAT exempt under the same reason. Now, again, some of you might think, but why does CA Campus charge us VAT then? It's because we're not registered under the Higher Education Act. We can't give you a degree. That's why you have to be registered for UNISA. If we could, then we would also be VAT exempt, same as why UNISA does not charge you any VAT. Then we've got Excel Property. This company was established in 2019, so quite new. The objective is to purchase land and property for use by other companies in the group. Its annual revenue each year exceeds 2 million rands. Now, this should be VAT registered then. Right. Potentially, there's nothing that says it shouldn't, or how they're making their revenue. If they are, because it says the revenue, it's not capital, so it might be they're charging the companies in the group. This is also very common, as a lot of you have seen, property companies. All the companies in the Excelsior group of companies have a September year end. All companies in the group comply with the necessary tax laws and have registered accordingly. And that's for this whole VAT issue. Now, Excel High builds new schools by purchasing vacant plots of land and constructing the schools based on international best practice and Excel High's own private research. The schools are state-of-the-art with modern classrooms and laboratories and green spaces where learners can socialize over coffee. During the 2017 year of assessment, Excel High borrowed 2 million rands from Excel Varsity at a market-related interest rate. Okay, so that's good. That means it's arm's length. A significant portion of matriculants from Excel High feeds into Excel Varsity's universities and colleges, and the 2 companies have a strong relationship. So why did Excel High borrow this money? Excel High used the funds obtained from Excel Varsity to purchase a vacant piece of land for 2 million rands. So it took this piece of land, which has a base cost 2 mil. Right, 2 mil times 100 over 150. Is it? No. Why? Because they're VAT exempt. Right, let's see. In 2018, Excel High commenced with the building of a school hall and completed it at a cost of 450,000 rands. So there's a building now on this piece of land as well. And the base cost is 450,000 rands. And it was financed through cash reserves, so no borrowings. However, before Excel High could commence with building the rest of the school, Violent protests broke out in the area and Excel High halted its plans. By the end of the 2019 year, Excel High abandoned its plans for Rustenburg. Neither the land nor the school hall has been used in the production of income. That's super important there, because it means thus no deductions or allowances have been claimed. On the 1st of July 2020, Excel High sold the land and the school hall to Excel Property. Excel Property was established during the 2019 year to hold the fixed property of companies in the group. Alright, so Excel High must have purchased this in 2017. Right, so it was before Excel Property as a company existed, so that's probably why they did their own. The property in Rustenburg had decreased in value due to the unrest in the area. Excel Property would attempt to sell the property for a higher value in the future. Excel High sold the property to Excel Property for 800,000 rands excluding VAT, being 500,000 rands for the land and 300,000 rands for the building. The market value of the land and the buildings, 985,000 rands, being 560 for the land and 425,000 rands for the building. Right, sorry guys, I see the wording is a little bit strange. I'm just trying to say the market value at that point in time was 985,000. Okay. Excel High and Excel Property agreed in writing that the sale would not be subject to Section 45, the intra-group rules, right, and Excelsior wants to set each company on its own. Now, Section 45 is not something that you've really seen at this point in time. You'll see it a little bit also later in the year. Basically, for what it means for you is there's nothing strange that you have to apply to this at this point in time. Okay. Then, before finalizing the sale to Excel Property, Excel High had a meeting with Excel Varsity. Excel Varsity agreed that it would write off 1.5 million of the debt owed by Excel High on the condition that Excel High immediately settled the remaining balance of the loan and paid the outstanding interest of the loan, which was 333,000 for the period. Right, so this is before finalizing the sale. So there's a debt write-off here. Now remember, paragraph 12a says, on asset with no allowances, calculate a new base cost. Guys, please revise paragraph 12a. This is one of the more simple ones. In this case, the land had a base cost. How much did it cost us, guys? It cost us 2 million rands, remember? Now there's debt relief. Of 1.5 million rands. It gets written off. So this gives us 500,000 rands as our new base cost. This is for Excel High. Excel Varsity, right, has the following. It has proceeds of 500,000 rands. That's how much a person has to pay, Excel High. It has a base cost of 2 million on the loan. So this is a capital loss. But it's to to a connected person is disallowed. That's paragraph 56. However, if paragraph 12a applies, paragraph 56 is not applicable, which means thus the capital loss, this is actually just a reminder for you, can be claimed. Why? Because we know paragraph 12a is going to apply in this case. Right, so this is just a little bit of a reminder of what will happen for Excel Varsity, the creditor. They will have a 1.5 million rands capital loss. They can't claim it because it's to a connected person. But if paragraph 12a applies, which it does here, then they can have the capital loss. Okay. Let's quickly see then the disposals here. Here's the disposals. The first disposal to Excel property is of the land. Now proceeds, we will have to use paragraph 38 because they're connected persons. So you must use the market value of the land. The base cost, remember, is the one that we calculated. So there's a capital gain of 60,000 rands. And then we also sold the school hall. Proceeds, paragraph 38. $425,000. The base cost, remember, is $450,000. So here we have a capital loss of 25,000. Now, remember, paragraph 39 says, cannot claim a capital loss on disposal to connected person. You can only set it off against capital gains from same connected person or two connected persons. So that 25,000 rands, because we have a 60,000 capital gain there, we can claim it. If it wasn't for that, we wouldn't be able to claim it. So guys, this gives us a 35,000 rands capital gain. So we'll go through it again also when I'm looking at the solution, but this has already covered the majority of it, so I'll talk through it just as a quick recap for you during that. But that's it. And in part C, guys, I'll just start it in the next recording.